please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Well, yesterday was an interesting trading session. In the final hour of trade, we did see a bit of a recovery. The Nifty, in fact, did recover close to around 50 points from the low point of the day. Both of them ended in the red. But the Nifty Bank, we saw a recovery of nearly around 350 points. The mid-cap and the small-cap index, well, they were relative outperformers in trade yesterday. Ekta, how's trade set up? Asian markets not looking too pretty.
Yes, absolutely. I think it's a combination of the buy polls as well as the global markets, which is probably going to weigh on us. But I'll just recap what you mentioned about yesterday, where the Nifty and the Sensex did end in the red. But what we did see was the Bank Nifty and the PSU banks recovering intraday. The FIIs net sold around 259 odd crores. But it's important to note that the FIIs have been net buying a little bit, at least in the past two sessions, if you exclude the one with the large trade on TCS. DII's net sold around 432 odd crores in yesterday's trading session. Now, if you compare us on a week-to-date basis with the globe, we're probably step in step with what's happening with the globe. So that gives you a good indication in terms of what we could expect in today's trading session as well. So watch for what's going to happen. The US markets were weak. We have Asia, which is weak this morning as well. And the SGX is indicating that it's probably going to be a sluggish start for us this morning as well. But what I would watch for is the kind of follow-on buying that we saw in financials, the intraday recovery, whether that lasts into today's trading session and whether there is buying beyond just short covering that we've been talking about. If you look at it, the Nifty PSU Bank Index is up over 3% on a week-to-date basis. And separately, we do have the Bank Nifty weekly options expiry today as well. We were talking about the buy polls verdict. The voting percentage is low, so maybe the impact of the BJP loss won't be felt that much in terms of the market, but that would be something that we should probably watch for quite closely. If you're talking about a Nifty range, there's probably support coming in at the 100-day moving average of 10,150. So maybe we need to see whether we manage to test those levels and see that support come through at that level. That's the 200-day moving average of 10,150, and the 100-day moving average stands at around 10,456. So maybe we are, in a range for some time within these two parameters. All
right, Ekta. So that's about trade setup. But what about the stocks we should look at for today's trading session?
Well, a lot of stocks to watch out for. So first up, I'll start with Havells. They've signed an agreement with Hyundai Electric for manufacturing magnetic contractors. We have news coming in from Himadri Specialty Chemicals as well with regards to an anti-dumping duty on SNF. Tata Communication, there's news coming in on that. Syntex Plastic Technologies, they've received shareholder approval for issue of around 6 crore convertible warrants. Wipro is going to be in focus on account of a divestment of their data center to US-based Ensono for $405 million. We have Andhra Bank, which has reduced their marginal cost of funds. HUDCO, where there's going to be a board meeting on the 19th of March to approve issue of non-convertible bonds. DHFL, also on account of allotment of NCDs. India Energy Exchange on account of a proposal of interim dividend. Hero Motocorp, which is extending its association with the Maharashtra State Police. And I just want to concentrate on a couple of important ones where ICICI Bank is going to be in focus on account of ICICI Securities IPO. And we have another one which is going to be in focus, which is Bandhan Bank, because their IPO begins today. They've already raised money via anchor investors, and this is going to be an IPO to really look out for from the financial space. So that would be important. And then sources are telling us about the resolution plan with regards to Binani Cement. And I'm sure you're going to probably fill us in a little more about that, Nigel. So all these stocks are going to be in focus today. So on to an exclusive news break then. Binani Cement's lenders have approved resolution plan for the company. Dalmia Bharat's bid has received the final nod. Ritu Singh joins in on the phone line to tell us more. Ritu.
Well, there have been lots of twists and turns as far as this Binani Cement insolvency proceedings have been concerned. At the first time, two bids were placed. by Dalmia Bharat and Ultratech Cement. Finally, after a lot of other people had also shown an interest, Dalmia Bharat emerged as the highest bidder. And as of the 27th February COC, banks had declared Dalmia Bharat H1, which is the highest bidder. But then Ultratech revised its offer by about 700 crore rupees, post which even Binani Cement promoters moved the court, saying they should be made part of the resolution plan. So there have been lots of delays and twists and turns in this. But finally, yesterday in the meeting held by bankers, they have voted in favor of Dalmia Bharat's consortium, which is with India Resurgence Fund, which is the Piramal Bain Capital, to acquire Binani Cement. The argument raised by bankers is that they cannot keep accepting bids, that are raised consequently, ignoring the fact that the deadline had ended, and therefore they've decided to go ahead with Dalmia Bharat's offer of 6,350 crore rupees for Binani Cement. At the same time, of course, the case of Binani Cement promoters is still in the courts, where the promoters want to have some sort of a say in deciding who the ultimate bidder or the buyer for their company will be. Irrespective of that, bankers are now going to take this proposal to the NCLT itself for their final nod, because that is the last nod that is awaited. The only spanner in the works could be if the court, decides to put this resolution on hold while it's hearing the promoters' plea. But as of now, as far as the bankers are concerned, Dalmia Bharat has been the chosen one.
Okay, all right. Dalmia Bharat is the chosen one. Then thanks so much, Ritu, for joining in and giving us those details. So the stocks you should be looking at for Dalmia Bharat, you'll be saying, well, yes, they have won the bid, and this gives them access to a new geography. Remember, Dalmia Bharat is currently in Northeast as well as in South India. Now, with this asset, they moved to the west part of the country. So the street really will be weighing an asset one versus are they leveraging themselves a little too much? So that's the point for Dalmia Bharat. Well, for Ultratech Cement, that would consolidate their position in the west of the country. So let's see how the street reacts to that. Were they bidding too aggressively? That's a question only time will tell, in fact, in terms of answers. And in terms of Binani Industries, remember the stock went from around 70 to around 150 rupees on this hope. Now the street suddenly is wondering, is the shareholder going to get anything? That's why, in fact, the stock has come off from around the 145 rupees to around 95, 97 rupees or thereabouts. So just keep those factors in mind for today's trading session. Yes, the stock has seen a sharp correction from around the 145 odd mark. Can the shareholder get something? That's the question that only the promoter of Binani Industries can answer, because Binani Industries owns roughly around 99% in Binani Cement. But moving on, the Indian economy is set to revert to its trend growth rate of around 7.5% by FY20. That's what, in fact, a World Bank report has stated. But it also adds that attaining a growth rate of over 8% will be, it will require several structural reforms. Ranjay Banerjee caught up with Junaid Kamal Ahmed of the World Bank to get his views on India's growth prospects.
The report rightly points out, for India to sort of catapult itself to the middle income status country, we need to grow at 8% plus for a period of 30 years. Is there anything you've seen so far in the last year, 2 years, that gives you the hope that perhaps 8% in the long run could be a possibility?
I think the basis for the 8% growth rate for the future is being established today. You see the type of infrastructure investments that are happening, not just only in terms of capital expenditure, but in terms of trying to create new institutions. So the whole EDFC, the freight corridors that are being created, these did not exist before. It's actually taking freight along very special types of institutions. So investment in infrastructure is extremely important. We're also seeing a reflection and a revisiting of how to reform the electricity utilities. Clearly, India's shift towards renewable energy can only be sustained if its electricity distribution system is also improved. So the Uday system and other reforms that are happening become extremely important in that structural shift. We're beginning to see the whole financial inclusion in terms of use of technology, in terms of bank accounts, being able to deliver services of social protection to people. All these create a foundation where, as India moves people out of poverty into an arena of vulnerability, you begin to create protections.
And this will, of course, have a gestation period.
It will have a gestation period, but your question was, am I seeing anything that's putting in the seeds for the future?
It's important to clarify, just in case viewers think that, after 2 years we're going to see 8% growth. What's also interesting, the report brings out how synchronized India is and how well entrenched the Indian economy is with the global economy, and perhaps this is one aspect which is largely underappreciated in this country. Considering that India's exports is stagnating and in fact declining, which I think is a worrying trend, what does it now mean in the context of the inward-looking policies we're seeing around the world, especially coming from the West? Does that sort of make India's exports more vulnerable?
I think there are two very important factors that we need to think through. One is GST. GST is creating an internally unified market. And if there's investment that follows the GST trend in terms of infrastructure, so movement of goods and people internal to the country improves, you're going to see a growth boost from internal trade that's extremely important. And because this infrastructure investment is related to how ports function, how rails function, the intermodal connection, you'll see that the connections between the world and India and its efficiency will increase. So there's quite a big boost that India will pick up from following up in terms of GST. In terms of the global story, I'm absolutely in agreement with you that it is important to keep global trading systems open. We really cannot sustain economic growth anywhere in the world unless global trading markets are open. And I think we from the World Bank will continue to take that message forward.